Hello my friends, it's Robert Miner with Dynamic Traders Group with a relatively brief video for our YouTube subscribers and Twitter followers. I haven't done one of these in about 3 weeks. We're going to update a couple of my favorite markets, gold and the dollar/euro, because they're in, I think, an immediate position for a trade strategy next week. And I'm going to describe that in detail to you. As usual, if you like what you hear, hit the like button, subscribe, tell your friends about it. I try to make these YouTube videos practical-oriented, trade-oriented for the real world. Before we get started, I want to mention one thing. I just released a new book about a week or so ago, The Definitive Guide to the U.S. Election Cycle and Stock Market Trends. It's the only book I'm aware of that focuses on this one cycle and the high probability, very biased periods within each of the 4 election years that gives you a trade opportunity. I really like how this book came out. If you trade the stock market, so stocks or indexes or stock index ETFs, you'll get a lot of value out of this book. It has more information in a practical matter than anything else I've seen that's been written on the U.S. election cycle and the stock market trends. And I give you all the data. I show you how to determine when are the positive times and when aren't the positive times, and why you want to be aware of any sort of information that's an average. Average trends are meaningless. No one makes money on those. As I say in the front cover there, if you want to be an average trader, make trading decisions based on average trends. And this book is not for the average trader. It's for someone who wants to excel. Okay, that said, let's start off with taking a look at the dollar and the euro. Then we'll take a look at gold, because these two markets are really intertwined right now. This is the dollar weekly data, and we're going to look at it right up to date. But it's just a reminder that from the September 2022 high, I believe that is a multi-year high, and we're only in the initial stages of a multi-year bear trend. So anytime the dollar's in a position to make a top, a corrective high, that sort of thing, is the resumption of the bear trend is likely to new extremes. That means new lows. So this is really important. I've got a long-term report for subscribers that goes into that detail. We don't need to go into that right now. But let's look at the immediate position. This is the weekly data. As of last week, the dollar came right up, pretty much tagged the 62% retracement, and which was just a few pips away from the 100% alternate price projection of the wave A from the wave B low. So that is a typical target for an end of wave C to complete an A, B, C correction. And it was right near the wave 4, what we call wave 4 of lesser degree in Elliott Wave terms, typical target also to complete a correction. So 5 waves down, that's an impulsive trend, indicates that the higher time frame trend is bearish and that this is a correction. And as of last week, it's at the price typical for a wave ABC correction. It's time-wise, next week is typically the maximum in time before a correction would be complete. That's the 62% time retracement. Doesn't mean it has to continue to that point, but that would be, we're near the extreme. And our weekly momentum cycle has reached dual look back overbought. So time, price, pattern, and momentum all in place to complete a corrective high that should then be followed by continued bear trend to well below these recent lows in 2023. That's a potentially significant downside. The key that we're looking for is a lower weekly close. Now, we only know if that's going to be made at every Friday, but if next Friday closes below 103.993, that will indicate that this would be a reversal signal at time, price, pattern, momentum, that this correction is complete. Let's go to the euro, which trades inversely. By the way, just in case you think I'm just another analyst or YouTube babbler, I'm not. I actually trade last year in 2023. I traded my Forex account up 60%. Not a great shakes, not a banner year, but pretty good double-digit year. And I've got a lot of documented years in the double and triple digits. So pay attention once again. Everything I teach here, everything I show you is practical oriented. Type of information that I use to make specific trade decisions. Okay, let's keep going. And then we're going to look at a specific trade setup for this coming week. And the euro's in a position, same position basically, to complete a weekly low and a corrective low. Do we need to wait for a close, a higher close on the weekly? Well, we don't have to. That would be a strong signal if that were to occur. Let's go to the daily data and see if there's a trade set up. So here we have from the October low, impulsive 5-wave advance, very choppy, typical of a correction, down to the 62% retracement, right in the time zone for a correction. This past week, on Friday, the euro made a bull reversal in the daily momentum. Now, it's been oscillating in the oversold zone for some time, but now this is the first bull reversal that's been made while the weekly momentum cycle is in a position to complete a weekly low. So it's important, but we want the market to prove that that low is complete. So I'm looking at just a close above the February 2nd close. That was this large outside bear reversal day. It was last Friday's close. A daily close above that level is a trigger for a long trade as far as I'm concerned. And the stop is very close. Stop is just below last week's low. So given that a continuation of the bull trend would take the euro well above the December high, the entry, stop, low capital exposure, high probability continuation of the bull trend. That's what I'm looking at just this coming week. So you might want to be prepared for that. Weekly position indicates a weekly low is probable. In this case, any weekly low is likely to be a multi-month low. The daily, all the technical position is that a daily low is probably complete. We just need some continuation on the upside a little bit to follow through on this bull reversal that was made on Friday. And I wouldn't be surprised if Monday or Tuesday we got that signal. I don't know if we're going to, but what I do know is that will be a setup for long trade. You don't have to trade the euro. There's ETFs. The euro is nice to trade because you can take a very small position to begin with, and then you can add to that position if the trend continues as anticipated. So keep alert to that next week. Let's take a look at gold. So we've looked at gold a number of times in recent weeks for potential trade setups for continuation of the bull trend. None of those trade setups have been triggered. So we're going to take another close look at it because now we're at some extremes from where that is likely to happen next week. And of course, the gold and the dollar are intertwined. They tend to trade and trend in opposite directions. That means the euro and gold tend to trend in together, similar directions. Not all the time, but they tend to. And when they're both in a position to make reversals, and in this case, the euro making a reversal low and a corrective low, and the dollar making a correction followed by a bull trend, it's a real wake-up call to take a look at both of them. So this is the gold weekly data, and it's just the closes, the weekly closes. Takes all that so-called noise out of there. So we can see here, since December, really if we even go back to early November, gold's in the same position it was in early November. So it hasn't gone anywhere for a couple of months. Let's just take a look at a couple key pieces of information. Off of the October low, it was 8 weeks up. Didn't quite have a weekly close above the May high. Traded above it, didn't close above it. And ever since that early December weekly closing high, gold's been correcting, essentially sideways. And look at this. As of, this is near the last week in January, 8 weeks, just essentially sideways. 8 weeks bull trend, 8 weeks sideways. Didn't even reach the 38% retracement based on weekly closes yet. That's indicating there's some buying in this market that hasn't broken out yet, But each time it looks like it's making a corrective decline. Buying comes in and holds up this market. That's a wake-up call that there's some energy building in it. Think of this as a spring, and at some point, the longer this trading range lasts, at some point, that spring is either going to let loose and there's going to be a sharp advance, more than likely, or it's just going to break and it's going to decline sharply. But coming out of trading ranges, this is just old-time chart analysis. The longer a trading range, usually the stronger the breakout or the failure. Our weekly momentum cycles made a dual look-back bull reversal last week. That is strongly indicating that this breakout will be to the upside, and that we're now, after several weeks, more than 8 weeks, we're now in a position where that momentum cycle can turn into be a bullish trend, reverse the price. Here's the daily closes. Again, this is the April contract for gold. And again, we can just look how long this trading range been, 2 to 3 months sideways. People are getting really frustrated. What we want to do is keep our cool and look for a specific trade setup would indicate that gold is going to continue a bull trend and break out. And that's what it looks like to me. The daily momentums are near the oversold zone. They're in a position from where daily lows are complete at the same time that the weekly momentums made a dual look-back bull reversal last week. So real important dual time frame momentum setup. And so what would indicate that this low is complete? Well, I just look at it looking for a close above the most recent little swing high daily close. And that's the close of February 1st at 2071.10. So, and that signal may be brought closer to the market depending on what happens early next week. But for right now, a close above 2071.10 will be a buy signal for gold for a potential breakout above this prolonged trading range. So be aware of that. That I know I've been looking at this for several weeks, and we've identified several go-long strategies. None of them have been elected. I don't know what the future holds. I don't know if this one will be. But what I do know is that if that setup is made, I want to get in that market before it reaches new highs, because new highs will should at least bring a lot of buying into the market. So we've got two, I think, great setups next week. And there's more than that. We update it, of course, 3 times a week in our DT reports. But here's a couple for you to look at. Well, that's it for today, my friends. Everybody take care. I'll be back in a couple of weeks. Make sure you subscribe so you get notified when I do another update. And check us out at dynamictraders.com. That's it. Take care. Robert Miner over and out for today.